Hi, this is Fuad Abasov, a broker with Right at Home Realty, and this is your monthly real estate statistics. January 2026 numbers are in, and we're clearly seeing a shift across the GTA and surrounding markets. You know, I've been doing this long enough to recognize when the market shifts, not just on paper, but in people's behavior and being in real estate on a street level 24 hours a day, 365 days a year. And right now, Toronto real estate feels different. Not chaotic, not collapsing, but different. Today, I will walk you through what's happening with prices, sales, inventory, and most importantly, days on market. And we will identify the real winners, the real losers, real numbers and real patterns across Toronto, York Region, Peel, Durham, and up into Simcoe. Don't forget to subscribe for honest monthly GTA stats without the hype. I keep it transparent so you can make smarter decisions. So here's the headline everyone is talking about. Condos in Toronto are selling under $400,000. Let that sink in. Downtown units, studios, high-rise condos under $400,000. We have not seen that price range in over a decade. That's not a glitch in the matrix, it's real data. That does not happen in a hot market. That happens when supply overwhelms demand. And that's exactly what we're seeing. That would have sounded ridiculous just a few years ago, and yet there are nearly 400 of them listed right now. And today, we're going to unpack why this is happening, what it means for you, and why the next 12 to 18 months could be one of the most interesting chapters in Toronto real estate in a generation. During the pandemic, when rates were near zero, there was an absolute surge in condo construction. Developers launched, investors bought, assignments were flipping before drywall went up. Fast forward to now. Those projects are completing, and suddenly, we have a wave on inventory hitting the market at the same time that interest rates are higher, immigration growth has slowed, fewer international students are entering, investors aren't cash flowing, and first-time buyers are cautious. That's not a crash, that's supply and demand rebalancing, and it's rebalancing aggressively. So, what the numbers actually say? In January, the average GTA selling price dipped to around $973,000. That's down about 6 to 8% year over year. Since the February of 2022 peak, prices are down roughly 27%. That's significant. But here is what most people miss. Even after a 27% correction, prices are still about 17% higher than pre-pandemic 2020 levels. That tells you how extreme the run-up was. Overall, in January, sales were quiet, very quiet. Just over 3,000 transactions across the GTA. That's down nearly 20% from last year, and it's one of the weakest Januaries since 2009. And here's the kicker. Our population has grown massively since then. So, more people and fewer transactions. That tells you it's not a lack of need, it's hesitation. Psychology is driving this market more than math right now. In Toronto Detached, prices are basically flat year over year around $1.58 million. But days on the market increased from 31 days to 37 days. Sales dropped, that means buyers are negotiating. Condos in Toronto averaged around $628,000, down about 7 to 8%, and inventory is sitting longer. This is a buyer's market, but not a panic market. Nowadays, buyers are very selective. They take their sweet time, so correct listing strategy is very important. Homes priced right can sell quickly, sometimes even in 24 hours. But overpriced homes, they sit, and they sit publicly. And that visibility changes seller psychology. But what stands out more than price? Days on market again. Some areas are seeing properties sit 50 to 75 days. That's almost double what we were used to 2 years ago. When buyers can think, compare, negotiate, urgency disappears. And urgency is what drives price spikes. Now, let's talk about something most people don't see on MLS, the assignment market. And let me tell you, it's ugly. Pre-construction buyers who signed in 2021 or 2022 at peak prices are now closing. But today's market value is lower than their purchase price. So what are some of them doing? Offering cash to the next buyer. Not small incentives, sometimes $50,000, sometimes $100,000, in rare cases, hundreds of thousands to cover the cap. That's how aggressive this correction has been in certain segments. That does not show up in headline averages, but it matters. Let's talk about mortgages. So mortgage pressure is rising. Mortgage arrears in the GTA have more than quadrupled over the past 3 years. Now, before panic starts, the delinquency rate is still very low overall, but the trend is upward, and here's why. Nearly half of outstanding mortgages in Canada renewed in 2024 to 2025. Many are renewing at payments 6 to 15% higher, and Ontario's unemployment rate is around 7.3%. When people feel uncertain, they pause. That's exactly what this market feels like. Paused. Not collapsing, but paused. Construction is slowing, and that's important. Ontario new home sales in 2025 fell to about 15,000 units. Historically, we were at 65,000 to 85,000 annually. Can you imagine? From 85,000 to 15,000. That's not a small drop. Condo apartment sales were down almost 90% from the 10-year average, and developers are not launching like before. So here's the irony. Right now we have oversupply in certain condo segments, but if construction continues slowing, by 2027-2028 we could swing back to undersupply. Markets are cyclical. This is a cooling phase. So is this a crash? Depends how you define crash. Prices are down 27% from peak, sales are weak, inventory is at January record levels, but we're not seeing mass forced selling. We're not seeing widespread distress listings. We're seeing hesitation, we're seeing negotiation, we're seeing realism slowly returning. And now, let's take a closer look at detached home sales in Toronto and surrounding areas. Let's start with Toronto detached homes. Average selling price was $1.58 million, essentially flat year over year, up just 0.04%, but sales dropped down to 16%. Days on the market increased by 19%. So pricing is stable, but homes are taking longer to sell and volume is softer. In Vaughan, detached homes were down by 12.65% year over year, sales increased by 34%, days on market jumped from 29 to 42 days, which is up 45%. So buyers are active, but only at adjusted pricing. So the biggest corrections are happening within East Gwillimbury, Aurora, Newmarket. These outer ring markets are correcting more aggressively. Then we have Oakville, Milton, Mississauga, Barrie, Innisfil, and Alliston. What happens next? Short term, the first half of 2026 likely remains soft. Buyers have leverage and sellers must price correctly. Second half, if rates stabilize, if job market stabilizes, if supply tightens because of reduced construction, we could see gradual stabilization. Not a rocket launch, stabilization. And that's healthy. My honest take, if you're buying end-user property and you plan to live there long-term, this is the most negotiating power you've had in years. If you're selling, strategy matters more than ever. Pricing just 5% too high can cost you 60 days on the market. And in this market, time is money. Toronto real estate isn't broken, it's resetting. And resets are very uncomfortable, but necessary. If you want my opinion on your specific area, whether it's Toronto, Vaughan, Mississauga, Durham, or up in Simcoe, I will tell you exactly what the numbers are doing there. Just shoot me a quick message. If you'd like to receive your own personalized sales report about home sales in your neighborhood, please call me at 647-801-3401 or email me at sold@fuadhomes.com. Thanks for watching and see you next month.